Wall Street well off the day's session's highs so far. Right now, the S&P 500 trading up a little less than 1% on a day when China is dominating the headlines, whether it's President Trump's comments on China or an IPO here on Wall Street. For more on the markets, let's go to Santa Monica, California. We're joined by Ross Gerber, CEO of Gerber Kawasaki. And before I begin, Ross, happy 10th anniversary, by the way.
Thank you. Thank you. I'm excited.
I wouldn't have known if you hadn't tweeted it.
I know. Well, when you're with the same woman for 10 years, I do think that's an accomplishment.
It definitely is, and congrats to you. Anyway, it's looking green on this festive day for you. What do you need to see to convince you that the markets have bottomed?
Well, we'd like to see the markets move higher would convince me that the market's bottom. I mean, it looks like a W bottom in here, and it's held 2,600 a few times, but we've got to get, back over 2,800 to break the downtrend. So even though we're seeing a rally right now, we need a confirmation that we're going to break through this trend, and it's going to take some sort of geopolitical change to see the markets move higher.
All right, you mentioned geopolitical change. You got several things about China today. President Trump commenting that he's willing to intervene in the Huawei case, also noting that the Chinese are buying soybeans again and that trade talks are underway. Do you foresee any resolution soon, or is this going to drag on until that 90-day deadline?
Well, it'll go to the 90-day deadline just because there's so many complex areas of debate in trade. But I think the overall tone is that we're going to get some sort of result, and I think that that's true. I do think that the United States and China have enormous financial incentives and political incentives to have a deal go through no matter how good or bad. So now that Trump's under pressure because of the stock market rout, we do think that he's going to be much more open to making a deal versus just holding the hard line.
All right, Ross, the other thing bugging the markets, of course, is the Fed and interest rates. Yeah. December 18, right around the corner. Of course, that seems to be a given, but what do you see in the way of additional cuts and how Wall Street will react if there's one too many?
Well, we look at sort of what the Fed's tone has changed in just 30 days, and we find that to be the most important bullish signal to the markets going into 2019 is the Fed not raising rates in 2019. We feel that rates have gone up far enough. If you put in one more quarter point, you get to 2.5. It's a great number to pause on. And so he can get one more raise in there and then say we're not going to do anything until we see inflation accelerate, which we're not seeing. And I think the market will be very happy with that outcome. And that's the best outcome ultimately for America, is for the Fed to stop raising rates as soon as possible.
All right, let's go on to today's IPO, Tencent Music, the streaming music company from China. It's rising on its IPO, although priced on the low end. What do you see this in terms of the sign for the markets that this IPO, at least today, seems to have succeeded?
Well, I think it's a sign of the strength of companies like Tencent, which we own a small position in and which we're bullish on. Tencent Music is a way for them to monetize this business that they have to some degree. We're not a fan of the streaming music companies like Spotify and Tencent Music because we think mostly that the business models have a lot of issues and artists are vastly underpaid by these enterprises. It is really, really unfair that over $50 billion of value has been created between Spotify and Tencent Music, and the artists have received none of it, not $1. It is so unfair. And so we expect that the cost of streaming music will increase over time as artists get fed up with the huge values being realized while most are still trying to make ends meet.
Oh, the artists will love you for those comments, but you're an owner of Tencent, did you say?
We own a little bit of Tencent, but we prefer Tencent as the main company, not Tencent Music, because we love the gaming piece of their business and WeChat.
Got it. And lastly, with Wall Street trading at these current levels, what opportunities do you see in terms of stocks to buy?
Well, I think for long-term investors, even though the risks are somewhat elevated right now because of Trump, it's created some really unique opportunities in tech. Being like, for example, video game investors, we've seen a huge sell-off in EA and Activision and Take-Two. All three have excellent games out. It's really the best gaming season we've seen in maybe ever. And here these stocks are down substantially into, P ratios under 20 and such. Really unique opportunity in the gaming space, as well as companies like blue chips like Apple. All this negative talk about Apple is discounting the fact that 5G is coming in a year, and Apple's going to have a 5G phone in about a year and a half, and it's going to create a whole new upgrade cycle in the iPhone. Everybody's counting out the iPhone, and I think that's just so short-sighted. And then secondly, their services and other products business is booming right now. So we look at that decline in Apple as just a crazy good deal.
All right, we'll have to leave it there. Ross, I hope you're going somewhere nice for dinner tonight.
I am. Thanks, Fred.
Okay. Once again, happy anniversary. Our thanks to Ross Gerber of Gerber Kawasaki joining us via Skype from Santa Monica, California. I'm Fred Kantayama, and this is Reuters.